Welcome, everyone. I'm Angelo Robles, host of the Angelo Robles podcast and the founder at Family Office Association. Today, we're going to cover Bitcoin, a deep dive. Now, I wish I had more than 1 hour to make it truly a deep dive, but we're going to try to make it very condensed and do the best we could. We have a really interesting guest with us today. That would be Matthew Sigel, head of digital assets research at VanEck. Matthew, welcome to the show.
Thanks for having me, Angelo.
If you want to go into the cryptography aspect of it, go for it. But what is Bitcoin to you? What does it mean?
For me, Bitcoin is a new form of money that is progressive in that it gives anyone equal access to the manufacturing process of money. So the way Alexander Hamilton, designed the central banking system and how it's evolved over the last couple centuries is that those who are closest to the capital source, the money creation, the Federal Reserve, tend to get, I'd say, privileged access to risk-free money. And that phenomenon has become even more pronounced in the last decade as the Federal Reserve has embarked on a series of bailouts of the private sector, which have been politically motivated and difficult to predict from a systematic perspective. And Bitcoin is the exact opposite because it is a form of money that is secured by a certain amount of thermodynamic power. Every Bitcoin contains the same amount of thermodynamic energy, which anyone on the network can verify. And so anyone with access to a power source can join in this democratized global money, which started from zero 12 years ago. And for the 1.6 billion adults in the world who have no access to a bank account, this is, one of the simplest ways to increase financial inclusion globally. So that's one answer. Another answer is that I see Bitcoin as the killer app in a decentralized technology that will remove market power from a set of digital monopolists who've grown up over the last 12 years. We can use the FANG stocks as a simple proxy. And in 2017, I wrote a piece called Google is Evil. It was the most clicked on strategy note I'd ever written. And the conclusion was, now it's very consensus that, Google has a natural monopoly, very high returns on capital, and the way that the market can disrupt that unique market power is through decentralized sensorless technologies, specifically cryptography. And Bitcoin was really the first example of that killer app built on top of cryptographic innovation, which mathematicians have been uncovering for decades. Their early work of really the solving the cryptographic challenge that was the Byzantine generals problem was, work that was done in the 70s and 80s, and it just took a long time for someone to seize on what was the, profound utility that could impact billions of people. It's because, previously that was the purview of spies and counter spies, right? Cryptography, and now it's been adopted in a technology that anyone can access. So that would be the second answer is it's the technology which will disrupt the strong market power of Web 2.0 giants, which politicians on both sides of the spectrum agree should be addressed.
Thank you. I do like to ask that as an open-ended question because no matter what guest, whether it's you, Michael Saylor, Plan B, and others, there was always kind of a different perspective and hopefully one that I could learn from and our audience as well. You focused more on kind of the monetary aspect, although our US government considers it property. It's hard to deny that it also is used as a medium of exchange. And we'll get a little bit to the Lightning Network and how that's increasing a little bit later. I guess when I'm asked about it, I probably skew a little differently and look at it more as digital gold, internet money, which is not a verbiage I like too much, but it kind of gets to the point. I am a believer, like, what would make a fifth grader understand Bitcoin? So perhaps digital gold is not great because most fifth graders have no context of gold the way that maybe we grow up with it. And that's a little bit part of the story right there. So really a store of value to me. Now I may question the volatility of it, and we'll get to some of those questions later. Uh, you hinted at it. Let's dive a little bit into it. What made Bitcoin different than cryptography that came before it and attempts at doing this? And a lot of people don't know, oh yeah, there's been attempts. But what really was a challenge was not having the blockchain, the nodes and miners, how that interplayed, true decentralization, and solving kind of the double spend problem, which you also went a little bit down that road. I mean, really, Satoshi or Satoshis, I think it's a group of people, really amazing in terms of the design, the eloquence of quote unquote Bitcoin, both Bitcoin in and of itself, and really maybe even more importantly, the blockchain. So I don't know if you wanted to add to that, but that really altered and changed history, I'm going to say, relative to what cryptocurrencies were to some extent pre-Bitcoin.
I agree with that. You'll often hear blockchain investors talk about something called the consensus mechanism, which is, the specific designs of a blockchain that allow everyone on the network to agree on the state. And Bitcoin achieves that consensus roughly every 10 minutes. So everyone who's a participant on the network, understands the truth through the eyes of the Bitcoin network every 10 minutes. And as we've seen from the political polarization in the US and the rise of kind of alternative media narratives and facts, it's quite unique to have everyone in the world agree on anything, let alone every 10 minutes, let alone what the value of a specific asset is. And so Bitcoin, through its scarcity, its design that limits the number of coins to 21 million and contains this halving mechanism that makes it progressively harder to mint each Bitcoin. It has a very unique property, and because it is so decentralized, that every 10-minute consensus is certainly sufficient to give kind of investors and participants confidence in the security and the value of the network. I agree with you that practically speaking, given that we have 10,000 cryptocurrencies, each with some different flavor of how it finds that consensus, and then what the eventual supply of tokens will be. Bitcoin is the most extreme in its limiting factor to that 21 million coins, and it's really been an exercise in branding to get the world to appreciate its similarities to gold.
For sure. And actually, if you factor in all cryptocurrencies / tokens, like on coin market cap, and they can't keep up. I think it actually literally is over 100,000. It's like a shocking number. Now, if we had more time to do a true deep dive, probably more of a masterclass, we would spend more time on some of the things that Matthew mentioned. What is a consensus mechanism? Talk a little bit about proof of work, which is what Bitcoin is, versus proof of stake, and how that it may be slower proof of work, but how it adds to the privacy of the network and truly makes it decentralized. What does that mean? There's no one single point of failure. There's no company headquarters. There's no CEO or board. There's no one computer to shut down. Although I just said we probably weren't going to go down that road, Matthew, I think it is important, even though we only have an hour, if you wanted to maybe tie that up before we move on to the next aspect of the value of proof of work within Bitcoin and how powerful that is for privacy and decentralization.
Sure. So proof of work refers to the mechanism by which every Bitcoin contains a specific amount of thermodynamic energy. It cannot be mined by any other method other than using energy to create electricity to spin a processor enough times that it will eventually solve a very complex riddle. And because of that structure, Bitcoin is extremely resilient and would require more than half of the network power to overwhelm and compromise it and essentially double spend it. So that would be proof of work. In proof of stake, all that's required is that a participant merely commit to lock up a certain amount of tokens and not spend them, such that other network participants can use those tokens and value to do the same validation process that a Bitcoin miner would do. But there's kind of one additional layer of abstraction in that the participant merely needs to commit funds and not actually the thermodynamic energy that will spin the processor enough times to solve this very complex program. So, without getting into the mathematics behind it, the Bitcoin network is, we call it, 51% resilient to this Byzantine network failure possibility. And, Ethereum and other proof of stake networks are often only about 33% resilient, meaning that 1/3 of the network could conspire to either double spend coins or cause fake transactions. So 33% is still quite an achievement. And when you consider that the speed of some of these proof of stake networks is, 100 or 1,000 times faster than Bitcoin, then you can, perhaps understand a lot of utility that the proof of stake networks can bring to the party as well. So 2 different processes for achieving consensus, one more secure and decentralized than the other, but both of them much more decentralized than our current banking system, with reasonable levels of security, especially when you account for some of the new kind of insurance applications that are sold on top of crypto that will pay out in the event of a hack or lost keys. You start to get to a set of very resilient networks when combined.
For sure. I mean, there's a lot that you outlined there that we could really do a really deep dive in, and I may disagree on 1 or 2 things a little bit, but I think the audience, probably important to understand that Bitcoin serves a specific purpose, and the proof of work is very important to its discretion, to its privacy, and really true decentralization. Now, Ethereum also uses proof of work. They're looking to switch over to proof of stake. We won't talk about too much the advantages or disadvantages. Arguably, that could make it more, let's go with the word centralized. And maybe everything in digital assets doesn't need to be perfectly decentralized. But effectively, Ethereum, Solana, and others really serve a different purpose. I would even argue maybe 360 degrees different than Bitcoin. And again, maybe that's something for a different time. I think it would be possible, partially due to electrical grids going down, which may mean a nation state attack, relative to 38% having some level of control for maybe an hour or 2. But we won't get into, could the blockchain be reversed? How could that be stopped? There's very cyberpunk nuances to the technology behind that. I probably shouldn't have even mentioned it. It opened up a can of worms. But this just goes to show these are very, very deep discussions. Really integral to Bitcoin, Matthew, is what you said earlier, the limit of 21 million. Now I'm going to complicate things even more. Those that are hardcore, what we would call Bitcoin maximalists, really look at it less at the 21 million and more as what's called as Satoshis. So I believe there's 100 million Satoshis inside of 1 Bitcoin. Okay, a lot of my audience's head is spinning. What's the significance of that? Does that matter? I'm going to leave that hard question to you. What would you say to that?
Well, Satoshi or whoever designed Bitcoin had large ambitions, and with the price already up to north of 60,000, it's quite useful to have a number of decimal points to make the Bitcoins, divisible, limitlessly divisible. And given that it's really a tool for financial inclusion to bring the unbanked into the financial system, it's just helpful to have so many zeros so that people can spend the equivalent of cents. So perhaps as more countries adopt Bitcoin as legal tender, as El Salvador did earlier this year, the Satoshi will begin to resemble a unit of account for smaller items that up till now, have not really been appropriate to buy on the Bitcoin blockchain due to the high transaction costs and the difficulty in, wanting to spend 0.00001 Bitcoin. So Satoshi is just a handy new moniker to count them.
You also hinted at it earlier. I mean, look at what we have going on. We have a massive deficit. We have money printing like it's never been printed before, printed in parentheses, and inflation, in my opinion, especially for those that are exceptionally wealthy, much higher than even what a CPI would be. All of that leads back to people saying, well, aren't we eventually going to have a central bank digital currency? Unfortunately, I think the answer is likely yes, but people don't realize what tremendous power and more lack of privacy to us as citizens and oversight that gives to the government. So even if it goes down that direction, they can make as many as they want. It's not like Bitcoin that is limited to the 21 million Bitcoin. So I don't know if you wanted to go over a little bit of counterbalancing that just because they're creating a cryptocurrency, AKA a central bank digital currency, it's completely different than a decentralized version of a cryptocurrency, which is the uniqueness and has been proven over 12 years, including in 3 wicked bear markets. We're going to get to that a little later. Completely different Bitcoin compared to a central bank digital currency.
That's a great point, Angelo. And I think that Nigeria's entree into this space 2 weeks ago with their release of the e-Naira, which is, I believe, the second central bank digital currency. This is a digital currency which pays no interest in a country with a 17% inflation rate. So it's really just a way for the government to exercise control over the citizens. It has no functionality for remittances as of yet. It's really only sufficient for kind of small scale transactions like you'd use a Venmo or a PayPal. But anyone who leaves their money in there is earning the equivalent of negative 17% real rates. So really, what is the value there? It's a closed system, a centralized database. They call it a central bank digital currency on a blockchain, but the blockchain is centrally controlled. Exactly. And that's not really what many citizens are looking for. So we'll see what the reaction is to that. I think what Europe is exploring is still to be determined. The U.S. has not yet decided, but I would agree with the way that you frame the debate.
Yeah, I mean, the whole thing with central bank digital currencies, and I don't want to make it a conversation on that. I've done 2 prior podcasts about a month ago with people internationally that were dedicated to that. That's the incredible lack of privacy. You won't be able to purchase anything without effectively the government knowing about it, even for 2 cents, for 1 cent, for $1 million, whatever. Their ability to potentially oversight, to tax, to charge different interest rates if you're not spending enough money. I mean, I could go on and on. And by the way, I think there's nothing that any of us could do to inevitably stop that from happening. Then it comes down to a matter of, do we have an alternative? And again, there's no single point of failure in Bitcoin, but we'll get to government regulation and how they can make things difficult. We'll get to that shortly. To give people a little bit of context, I mentioned this a couple of days ago. Over the last 10 years, admittingly, cherry picking a time frame, over the last 10 years, Bitcoin may be the best performing asset class of all time. I mean, just listen to this. 1% in Bitcoin, 99% in cash, earning nothing, over that same 10-year period would have outperformed, as far as I know, any other asset class. Yeah, that was Bitcoin at a really, really, really low price. Do I think it's going to go up that multiple over the next 10 years? I'm going to go with absolutely not. Still, that being said, I mean, that's startling. 1% in Bitcoin, 99% anything else, and whatever, venture capital, angel investing, didn't even come back close to it. Inflation. So, I mean, I said for those that are incredibly affluent, buying more assets that are appreciating, whatever, buying homes in Malibu and London and football teams. And I know that's not the everyday person. I get it. But their inflation, okay, if I'm including assets going up a lot, I don't know, maybe their inflation's 50 to 100% a year. I used to say 20 or 30%. Apparently that wasn't enough. I mean, this is an interesting time. How do you think Bitcoin, and I think you answered it partially with the Nigerian example with what's going on there, Bitcoin addresses or could be a partial solution to some of those challenges of things going up, up, and up?
Yeah, I want to go back to one thing you said, which was nobody can stop the CBDC from happening. And I would just make an observation that when the draft of the infrastructure bill came out a couple months ago and included some rather negative crypto provisions around defining who is a broker and some of the tax reporting around crypto, there was really a groundswell of a bipartisan movement, most visible on social media, but which eventually trickled up to the lawmakers. And we saw a considerable education effort going on in Washington, D.C., which we were happy to be a part of. And the result of that was events like the Texas Blockchain Summit, which occurred down in Texas 3 weeks ago, and where there was really a wide and broad consensus among policymakers and Bitcoin miners that the Texas energy supply is a unique resource, very high in both wind and solar, and that Bitcoin mining can help with the resiliency of that grid and monetize a lot of the stranded energy, which still finds its way into the atmosphere in terms of CO2. So there are things that we can do to change the conversation in this country. That's why it's America and not China. And I'd encourage all the listeners to make their views known, because it is having an impact. And as to your question about how does Bitcoin address inflation, for me, it's kind of like a pressure valve that absorbs those inflation views and gives people an alternative narrative to buy into, and that puts pressure on policymakers to run the system in a more responsible fashion. So to that extent, I'm not a maximalist. Don't believe that this is a system that will take over 100% of the world. Decentralized networks, by definition, suck their power and resources off the unused capacity of legacy networks, and so there'll always be this balance, right? Maybe it's as the steady state is 80% in the fiat world and 20% with a very high volatility in the crypto world. We will see. But as long as investors can find a rules-based monetary system that doesn't bow to the political demands of certain racial, sexual, ethnic constituencies, just follows the code, that's a very attractive proposition for, perhaps a plurality of the population. We will see. And so that's how it acts as an inflation hedge, in my view. The other thing is that because it's secured, Bitcoin specifically secured by thermodynamic energy, the cost curve we can model, and to the extent that commodity prices are rising and it's costing more to get energy out of the ground, then the marginal cost of Bitcoin will also rise. And that's bullish for the Bitcoin price over time.
When I asked you what is Bitcoin to you, you did lead with effectively, although technically our government calls it property, but effectively is money. I probably led more with it's a store of value. This would be my question for you on the monetary aspect. It's relatively slow, I would say somewhat expensive. Is it realistic I know you're going to bring up Lightning, so go for it. But is it realistic to think that it could scale? Maybe it's not meant to be really private and be decentralized. Maybe it's not meant to be the world's currency.
It's possible. Many assets don't scale and require derivatives, financial participants to agree on derivatives that make the asset more liquid and can express, future views. So what we've seen in the last year is really the buildup of a new infrastructure layer that allows the Bitcoin network and other blockchain networks to scale. And so the foundational building block of that innovation is the smart contract, which is a piece of software that lets people embed instructions into their money. Bitcoin, because of its kind of elegant simplicity, lacks that type of smart contract functionality. So we should think of Bitcoin as kind of the base layer of money, but to the extent that it can be used as collateral to take out loans in other currencies or to leverage positions, and then to use smart contracts to give investors the ability to really program that money, create, if A, then B type scenarios for where to send it. That creates this kind of velocity of money inside of Planet Crypto, the velocity of money of investors trying to seek out the highest returns. That creates kind of trading commissions, which are captured by cryptocurrency exchanges, decentralized exchanges, and those transaction fees are a stream of income that you can securitize. So there's a lot of value creation going on that is kind of built around Bitcoin, not necessarily on top of Bitcoin. And that's where this parallel financial system is growing. Now, in the case of Bitcoin specifically, about 10 transactions per second, not particularly scalable for, credit card purposes. But there's the ability to create what we call side chains or scaling solutions, which are pieces of code that run on top of the Bitcoin blockchain, perhaps sacrifice some of the decentralized aspects, but in return give more speed and more programmability, and thus transform Bitcoin into more of a medium of exchange. And so, as you refer to, that is innovations like the Lightning Network, which El Salvador has adopted in their kind of remittance to remove the kind of 6% fee that Western Union charges, rather use Lightning Network. Yes, it's a little bit centralized, so is Western Union. Essentially allow citizens to remit money back to El Salvador for free. So yeah.
Yeah, I think for those that want to do a deeper dive into Bitcoin and its grander potential as money, it would be really important to understand the Lightning Network. Now, I hate to get too deep for some people. That is what's called a layer two. Could I make the argument, and it's probably how hardcore maximalists would believe, that potentially it's probably not quite as decentralized, but you just hinted at, and as purely secure as Bitcoin is? Should that concern us or not really?
It depends what your use case is. If I wanted to send $1 billion to a counterparty across the world, I might not use the Lightning Network because, it has slightly less security. I'm depending on really a centralized company, much like I would depend on a bank. So I might prefer to pay the Bitcoin fees, wait the additional couple minutes, and be 100% sure of final settlement. So I think really there are so many options as to how to achieve an individual consumer or investor's desired mix between decentralization, security, and price. That can be a really daunting prospect for investors who have no experience in these blockchain technologies, which is why it's rational to use the Lightning Network, because you can save money versus what you'd pay Western Union. You're dealing with basically a similar service, a centralized intermediary using kind of public infrastructure to transmit money, but just at a much lower cost. So that's really our view is that the technology that underpins these services, Bitcoin, Lightning Network, Ethereum, et cetera, it is a faster and cheaper way to send value across the internet. It's native to digital, and it's open in the sense that the principal blockchain networks, less so Lightning because that's a centralized service, but the main open source blockchain networks like Bitcoin, Ethereum, anyone can see their code, anyone can propose changes, and we've seen in software that open source tends to take market share from closed solutions. That was the story of Linux and Red Hat in the 90s and the 2000s, and so that's how we see this playing out, is a series of Red Hats on top of a base layer Linux, which was Bitcoin or Ethereum.
Is Bitcoin too volatile at the moment to be used as a reserve currency? And an important part too that I hinted at earlier, if it even is used for that, must it then be priced in Satoshis?
We will see a lot more things priced in Satoshis as more countries adopt Bitcoin as legal tender. Right now, there's only one nation, El Salvador, set up a rather unique fund, which is almost like a liquidity pool that's been capitalized with equal amounts of Bitcoin and dollars. And then they will try to keep that pool in balance in order to satisfy the buy and sell desires of their citizens who are mostly accessing Bitcoin through the state-run Chivo wallet. And you asked, is it rational to use it as a base currency? I would say that if a country doesn't have the ability to manufacture its own Bitcoin and mine its own Bitcoin, then it may be somewhat risky as a base kind of reserve asset. But in a country like El Salvador, which has all this latent energy from volcanoes, they don't have the resources to build power plants adjacent to those volcanoes, nor transformers and high voltage electricity lines and all the infrastructure that we take for granted in first world countries. They don't have. What they can do is capture the energy from these volcanoes, set up a Bitcoin mine that's adjacent to that energy, turn that energy, that thermodynamic energy, into Bitcoin, and use that to capitalize this fund, which then satisfies the liquidity needs of their citizens. So if you can manufacture your own Bitcoin, why not? You'll never have to sell. You've got the liability from your citizens making transactions, and then you've got the assets which will grow as you monetize that energy into Bitcoin. And we've seen chatter that other countries like Ukraine, Belarus, may follow. Laos today, there was a story in the newspaper that Laos has mined a couple $100 million worth of Bitcoin with hydroelectric power, which is trapped. This is a landlocked nation, which are among the usually the most disadvantaged countries, no access to oceans. Isn't it tremendous that with the hydroelectric power trapped inside their country, they can now turn Bitcoin into money and buy access to the ocean if they so desire?
Before I get into my next series of questions, and if you want to correct me on it, Matthew, please do, but I'll say on your behalf, we really are fortunate to have Matthew on today. He is representing his own personal opinions, not that of the company. This is for educational and I would even say entertainment purposes. New information comes in all the time. We may partially or fully change our mind tomorrow. You're hearing this at a point in time, which is how we feel per our opinion at the moment. If you're ever looking at something from an investing perspective, everyone's situation is different. You need to do your own diligence, time horizons, risk tolerance, and whenever you invest, you could lose money. I would even say you could lose all your money. You must understand that going in. Okay, so here's, I guess, one of the bullish cases for Bitcoin. There are still billions of people around the world, some of those that you mentioned, the unbanked in certain countries, that eventually, when satellites go up, they're going to have the ability to be more active in today's economy. We have institutions that are starting to get involved in Bitcoin. Mass Mutual is well known, and I'm sure there are others. That being said, I think we'll agree that probably under 1% of institutions are allocated to any aspect to Bitcoin. We may get to ESG and regulatory concerns that are probably keeping them a little bit on the sidelines. But you have more people getting internet access, you have more institutions inevitably coming on board, and you have more governments like El Salvador. You mentioned a couple. You could make a bullish case, but I'm going to put you in a bit of a tough spot. Right now, Bitcoin is what, maybe 1.2, 1.3 trillion as an asset. Yes or no? Within 10 years, a pretty big time window, do you think Bitcoin will ever hit 100 trillion?
$100 trillion?
Yeah, let's say 100x from now in 10 years. So you got time to work with, but not too much.
It's certainly possible. We'll see, what the composition of the Fed board is and how the U.S. economy reacts to the next round of tightening. Right? Obviously, developed markets have been quite hesitant to raise rates and remove this extraordinary stimulus. Emerging markets have been much more forward-thinking on that. Perhaps that's because of the budgetary impact of raising interest rates is, unknown. And what we've seen over the last, call it 15 years, is every time that the U.S. 10-year kind of reaches the support, the long-term support, the U.S. economy slows down because higher rates tighten financial conditions and choke off the recovery, and then the Fed jumps in with more money printing and kind of lower for longer intellectual justifications, which for many don't make sense anymore. So yes, I would say it's possible that in dollar terms, Bitcoin can be 100x in 10 years.
Bitcoin has had three, and again, we're not going to get too technical. We don't have enough time. What is the halving cycle and all that? We'll have to save that for a different time. But it's had three significant bear markets, what our industry calls winters. And that did follow a certain cycle pre, quote unquote, the halving cycles in Bitcoin. Plan B, who's now a very well-known figure, maybe shocking to some. He was basically asked, do you think we're past that? Do you think we'll still have a significant downturn? And he did say, no one knows. We don't have a crystal ball. But if he had to go by history, probably yes. Should we be concerned of a significant 80% decline? Or is this part of the incredible volatility of still an early technology asset class, and it's needed? And if you follow the history, it also goes up. That creates a new floor and it goes up from there. What do you think?
I think that all of these blockchain networks are highly reflexive, and a higher price creates a lot of positive externalities that become self-reinforcing, and in the same way, a lower price does the same. And so while I think that Bitcoin was designed to, over time, exhibit lower levels of volatility, that will make it more of a reserve asset and medium of exchange, we're still in the middle of that process. So, I don't personally believe that another 80% peak to trough is likely because of that maturation process, because we've got a lot more large, steady buyers. I've counted 4 or 5 pension funds just in the last month, from Australia to Korea, Houston, Miami, Canada, that have kind of committed to supporting this asset class over time. When we wonder if the 60-40 portfolio is still relevant. Merrill Lynch just recently wrote a report about the death of the 60-40 portfolio. I agree with you. So I don't think there's going to be 80% decline, but you never know what's going to cause a bear market. And if there's a policy surprise, then this kind of reflexive nature of these networks, even more pronounced than Web 2.0, because all of the value is going to participants, not to a centralized entity, and absorb those losses and maybe pay out to users in the form of customer acquisition. Like, there's less of that in crypto. So, volatility is to be expected. And that's why on our math, investors are putting 1 to 10% of their portfolios in here and not 90%.
True. I mean, it's hard to define because everyone's situation is different. It's probably among the most common questions I'm asked. And I'm active broadly in digital assets. Bitcoin is just a part of it. You know, what percentage? I don't know. It depends. Everyone's situation is different. And I'm not the first one to say this. What I'm pretty confident to say, it should be something other than zero. So, you know, you'll have to figure that out yourself. Uh, I think perhaps the most important question that I'm going to ask you, I get different answers from everyone that I ask this on Bitcoin or really anything. I think it's really important, and we're all subject to some of this, to not anchor and to be not be subject to confirmation biases. We know there's some significant figures that are effectively bears, I guess you could say, on Bitcoin. Nouriel Roubini, Peter Schiff, Paul Singer, John Paulson. There's equally very influential and great investors that are on the other side of the coin. But I think it is important to ask this question. What would cause you to change your mind about Bitcoin?
If Bitcoin capital gains were targeted with a specific tax, right? So if the major economies got together and said, we're going to tax all cryptocurrency profits at 99%, that would be
yeah, that would do it
problem.
For me.
That would be a problem. So I think what we saw from the reaction to the infrastructure and reconciliation legislation that's working its way through Congress is that Americans don't want that. They don't want a hyper surveillance state. They are drawing distinctions between how China is treating cryptocurrency and how a free market should treat it. You know, I'm on the lookout for these worst case scenarios that you find. Maybe a Bitcoin outage would be a problem. Maybe some evidence that quantum computing is a long-term threat. You know, we've got a research team to keep an eye on those things, and none of them look to be flashing even yellow, let alone red. So I'd say, you know, punitive specific tax targeting would be a bear case.
I completely agree. We'll try to keep our little back and forth on this part because we have limited time to maybe 2 or 3 minutes. It definitely would be effectively regulation, especially, and I'm very impressed that you brought it up, a little bit of collusion among very powerful governments, whatever, the UK, the US, Switzerland, Singapore, like all kind of coming on board. Yeah, the libertarians, I get it, I'm one of them, here in the US are going to say, well, they can't do it. There's no single point of failure. It's open code protected by the Constitution. And yeah, you're theoretically correct. But the government, come on, they completely control the on and off ramps. And one thing they could simply do, they could do a lot of things, is exactly what Matthew said. We're going to do a tax, and that's it, period. I think inevitably there is going to be some level of compromise because the government's going to have to make money here somewhere. Let's say it's a 1% tax annually, like real estate. My problem with that, and I agree that I may need to settle for that if that's the only option. The problem with that is, do you think governments ever stop there? 1% turns into 2%, turns into 5%. And then once it gets above that, then, you know, Bitcoin probably is not going to go up 3x every year forever. It's going to make it look a hell of a lot less attractive. Now, I would argue, if I was Canada or Portugal, come here. We'll give you amazing tax breaks. You're paying a 23.6% excise tax in the US. We'll give you credits against that. A country will rise up, probably Canada. I don't know, although they've not been so great so far in crypto. And we would lose young, talented, smart, wealthy people that are willing to pay fair taxes if we go down that road. We're probably preaching to the choir here, but if you wanted to comment on that, go for it.
Yeah, sure. I mean, crypto builders are game theory experts by definition. And so how sovereign nations would react to this new form of money was something that we've been thinking about for a long time. And the prospect of enough countries coming together with the same idea and framework about how to regulate digital assets is just not something that we see developing. Each country has its own view on the topic. And of those that you just mentioned, for example, Singapore was just out in the last week saying that they want to become a hub for cryptocurrencies. Canada has listed, physical Bitcoin ETF and is attracting plenty of talent. I just saw yesterday that the largest bank in Thailand, which is majority owned by the king of Thailand, just bought the largest crypto exchange. So you've got, little countries that are, to your point, recognizing the innovation, the ability to maybe leapfrog a generation of technology and adopt the newest of the new, and energize their youth, attract talent. It just, look at what happened in Glasgow this week with the climate summit, and tell me that global nations are closer to cooperating than ever, and I would say no way, right? The global nations are not paying their $100 billion a year promise to the poor nations for the climate transition, and as a result, no one can agree on a way forward. So whether you like it or not, it's more of an every country for himself landscape than it was in the 90s and 2000s, when globalization was really the consensus mainstream view and there was not this alternative narrative.
The other things I completely agree with you on. We're not going to have enough time to do a deep dive, but I do admit there are challenges. Regulatory probably is number one. Theoretically, power grid and electricity going down. I don't mean for an hour or a day, but whatever. A nation state attack, a crumbling of our sovereign system here in the US. A tiny chance, but it is something that's somewhere in the back of your head. Meant to be a little tongue in cheek, but not really. Tweets from Elon, relative to ESG and green issues. And one that I think is a little more serious than most people give credit to, and that is the Satoshi or the Satoshis appearing. But yeah, there's things that could go wrong with that. It could be a loss of faith among the maximalists. It could be that person being kidnapped and tortured, giving up the keys to the first 50 block of Bitcoin, that being moved. Do miners still get paid? Quantum computing. You just have to be realistic here. There are things that could go wrong. It's changing topics quickly, but we only have about 7 or 8 more minutes before we go to a close. Will Taproot make the Bitcoin blockchain fast and scalable?
I think, let's take a step back. The Bitcoin network, because it's so decentralized, has had a limited number of soft forks and code revamps since its creation. I put the number somewhere around 20, right? That's in contrast to Google, who's probably rolled out 5,000 major adjustments to their code in the last 10 years. Those devs are shipping every day. So it takes a lot of work, and it takes a very attractive proposition for Bitcoin network participants to come together and agree on a soft fork, as they have done with Taproot. So without kind of getting into the very details of it, Taproot solves one of the known security risks on the Bitcoin network, which was that the securities used to sign transactions used to be malleable, kind of adjustable. They will no longer be. So it's no longer technically possible to alter the signature of a transaction before it gets confirmed. This should lead to some kind of marginal increases in security, but from my perspective, it's kind of a non-issue. There have been so few adjustments to the code. They're very incremental. This is another incremental one. And we feel pretty confident that, it's a modest upgrade that should lead to some additional security and scalability issues, but it's not going to suddenly turn the Bitcoin network from 7 transactions a second into 700. Bitcoin will always require side chains and layer 2s in order to scale.
This may get a little chuckle out of you, Matthew. Since I consider Bitcoin more probably of a store of value, is it the best store of value? Who knows? It appears to change all the time. But I could argue, is Shiba Inu a better store of value? look at the increase in prices, look at what they're building out. It's way more than just intrinsic value, which I could argue all Bitcoin is. It really doesn't have pure quote unquote intrinsic value, which is fine. Maybe that's what makes it a great store of value. But I'll bring up something like an NFT, CryptoPunks. They've never went down. I mean, I'm assuming they will. I don't know, at some point in the future, then go back up again, probably a lot. So I think when people get locked into maximalism and it's Bitcoin or nothing else, and they're anchored and closed minded, they don't realize that the ecosystem is very unique. We don't really know who the pure winners are going to be in 5 or 10 years. Do you keep an open mind relative to other cryptocurrencies, to other platforms, Ethereum, Solana, and even to NFTs like CryptoPunks?
Yeah, that's a great point. One of the defining characteristics of the equity bull market over the last year has been the rise of kind of the winner-take-all dynamic within these Web 2.0 companies. The network effects have been so strong, the kind of intangible asset creation, the flywheels have been so powerful that we've seen in major industries like advertising search, Google taking 80–90% of the market, but really across so many Web 2.0 verticals, the first mover or the leader has captured 80% of the value, 90% of the value. That's true on YouTube. Crypto, because it is decentralized, it may be that these network effects don't apply, or it may be that they are turbocharged because it's even more of an intangible asset environment. And that is really still a dynamic question, which is to be determined. So Ethereum has kind of started out with 80% market share among smart contract platforms, capturing 80–90% of the value. This year, that market share has fallen, and it's now kind of closer to in the low 60%. We've seen other smart contract platforms like Solana and like Polkadot, release really interesting technology, very scalable, fast, and have attracted significant developer participation. So maybe it is that the market shares whip around a lot faster and investors will have to be completely nimble. So that's why we're working on index solutions to try to capture some of this volatility and give broad, affordable exposure to investors who want to package together a number of cryptocurrencies at a very low fee. But to honestly answer your question, we don't know. It's one of the open questions. As for Bitcoin, I personally think that there's a lot of just franchise value that's been created, that money is a trust issue. And that's why the US dollar has become so predominant in the last many decades. That's why gold has been minted for 3,000 years. Bitcoin is in the early stages of that, but given the adoption that we've seen from institutions now around the world, I think it would take a major disruption to compromise that franchise value. And then when you combine that with the scarcity function, it just becomes far and away the number one option, and Shibu coin cannot compete with that.
We're so limited in time. There would be much to follow up with on there. We probably have time for 2, I would say, lightning questions, pardon the pun on lightning, relative to the Lightning Network. They'll have nothing to do with that. And they're actually pretty deep ones, so we're probably not going to do it justice. And some would argue they're a little bit along the conspiracy theory side. Do you think there's a significance of the BTC block reward in the Genesis block, that first 50 block? It's never been moved. Does it mean something? If the keys are ever discovered or someone moves it, we don't really know what would happen. Maybe miners don't get paid anymore. I know our community doesn't like to talk about this kind of stuff, and I'm not fair to you giving you 30 to 60 seconds to answer it, but I'm often unfair. I'm sorry.
I think the number is 22% of all Bitcoins have not been moved in the last 5 years. Satoshi or the Satoshis own a large proportion of that. Anytime there would be a surprise in the amount of supply that is liquid. It's similar to like a corporation where the founder or someone who owns a large chunk of stock would decide to sell without explaining, or say it's because of family reasons, or one of those stories that no one believes. And if a big chunk of those coins suddenly materialize and hit the market, yeah, probably be disruptive. There's no indication that that's the case. And if that person or group of people were alive and were interested in acquiring anything of value in this world, they'd probably be selling those coins. They have not. So the base case has to be that they're lost now forever.
Okay, the other one, we'll give it 1 minute, then we'll do our close and get you out by 12 noon. And it's also one that we could probably go on and on with. The Colonial Pipeline ransomware from a couple of months ago. There are those that would say that was pretty significant, and the US government seemed to have solved, using that word a little loosely, solved that awfully, awfully quick. How did they do that?
Blockchain is very transparent. Everything is visible, and there is a significant private sector dynamism in tracking all these wallets and figuring out who they belong to. Now, you have to pay these companies a lot of money to get their insights, and they will protect their customers' privacy. But when it's the US government knocking on the door and they want to know who XYZ wallet belongs to, if one of these companies like Chainalysis or Merkle Science or a private sector entity that is using AI to map the characteristics of all these wallets, they're going to know and they're going to share it. And I think that's a very powerful example of the power of this pseudonymous network, that you can't just look at everyone's personal history and map it to their name, but if you put in enough work, you can make an educated guess, or in the case of the Colonial Pipeline hack, a very specific determination of who the wallet belongs to, and track those people down. And there was a similar there was an NFT transaction. One of the Bored Apes sold last week for $500 million in a transaction that was kind of like a paint the tape transaction. Someone transferred their Bored Ape to another wallet, took out a loan for $500 million, bought their old Bored Ape, and then paid back the loan, all in one more contract transaction.
A flash
loan. There was a lot of complaint about this. Oh, it's painting the tape. It's unethical. But the fact is that everyone can see that transaction. Everyone can see that it was a sham transaction, and whoever this guy did added value to his Bored Ape by dint of his creativity, much like a illustrator might iterate on a piece of Disney IP to create more value for Mickey Mouse versus Donald Duck. So that's what this guy did with his Bored Ape. And because the blockchain is so transparent, everyone can see that, it's visible, and I think it's similar to the Colonial Pipeline hack. The more work you get in, the more details you can reveal about the underlying motives and identity of the actor. And then if you've got a subpoena, well, there's a good chance you're going to find that person.
Yes. We only have about 1.5 minutes left. I wish we had time to go into a futures-based ETF, talk about backwardization. There's lots of depth. Van Eck is still currently in the filing process. It's not ready yet. Maybe it happens in a week, a month, a year, who knows? We would love to have you back on and focus more on that. But in the meantime, I'd like to give you the final 30 seconds, a minute, whatever you want, how people could learn more about you, about potentially what Van Eck could be doing. How could people learn more?
Oh, thanks for that opportunity. So Van Eck has a number of investments in this space, ranging from venture capital investments. We've created a range of crypto indices that are trackable on services like Bloomberg, so you can really see like what sectors of crypto are working well and what are not. We've got 5 ETFs trading in Europe. Bitcoin, Ethereum, Polkadot, Solana, and Tron, between them about 600 million in assets. We've got an ETF trading in the US. The ticker is DAPP, like DApp, Decentralized Application. This is crypto enablers that are trading via publicly traded companies like Coinbase and the Bitcoin miners. That assets there have been growing. So please come to our website. I've got a blog. If you go to VanEck and click on digital assets, put out work monthly. So you can follow me on Twitter, Matthew_Sigel. And yeah, you'll be seeing more products out of VanEck.
Sigel, correct?
That's right.
Sigel?
Yes.
Correct, the spelling. Excellent. This has been fantastic, Matthew. You're a great guest. I look forward to having you on next time. Our live audience, I recommend you stay on because I promised I would maybe talk about a couple of subjects within Bitcoin and answer any questions via the Q&A feature. And we are going to let this run into a recording. I don't think I've ever done that before after a guest has left, but we'll try new things. But Matthew, I know you have to run. Thank you for being a great guest. Thank you.
Thank you.
Okay, everyone. Again, I've never really done this before. Usually when the guest goes, it's time to say goodbye. But I do want to live up a little bit to the billing that we gave it. We've had two guests this week on Bitcoin, Natalie Brunel and Matthew, a somewhat of a different perspective. Some similar questions in some ways were asked, but the normal, like I had with James Altucher, like 2.5 hours, or Michael Saylor, 90 minutes, or Plan B, 2 hours. I really do like longer deep dives. I probably had to leave literally 30 questions on the cutting room floor. And some of them, I'm not going to be the best person to self-answer. But I did want to give a little bit of time for maybe a couple of comments to, if there's questions that I'm capable of answering, to be of some value and help there. And let you know that we're extremely active broadly in digital assets. I don't totally focus on Bitcoin. I'm not a maximalist. It's one that I'm intrigued by, I'm humbled by, I have respect for. And it's important for the foundation, or in the beginning, so to speak, of the digital assets ecosystem, but I'm much, much more diverse. So I don't live and breathe only for Bitcoin, studying every little nuance in it. There's so much already changing literally every minute, every day, that it's impossible broadly in the digital asset ecosystem, NFTs, cryptocurrencies, tokens, the metaverse, DeFi, staking in DeFi, yield farming. I mean, it's impossible for one person to keep up with. I try to do the best I could and probably often fall very, very short. But I did want to maybe give a couple of comments. I am going to be looking at some of the questions that come in. And, maybe we'll do this for 5 minutes, maybe half an hour. I do have 2 programs I'm hosting today. I'm doing a really significant program on my 172-page handbook on sovereign risk. And some of those issues came up a little bit in my discussion with Matthew. So for those that are live today, and I'm not sure if I'm going to be recording it, that is at 2 o'clock Eastern time. If you don't have the info, send me a link and I'll send it to you. And that will be what I call a 90-minute, maybe 2 hour, I'll see on my mood and my voice, but a 90-minute, what I call masterclass primer. And we're going to get into countries around the world that may be good to consider for residency, for citizenship, for assets. And I get pretty deep on it. So if you're interested, kind of let me know. Okay, back to the core subject today. There's a couple of questions that did come in. I'm looking at the chat feature, probably more for our guest, but it said, you said alive, are you speculating Hal Finney is Satoshi? Now, probably 99% of my audience is going to have no idea what that means. Well, do the research, look up who Hal Finney was. Brilliant. If I had to take a guess, an educated guess, one, I think there's not one person that's Satoshi. I don't know, maybe 3, it may be 50. Probably Hal Finney was most integral to that. It's an opinion, I might be wrong. In case you're wondering, I don't know, 7, 8 years ago, he died. So I did bring up the issue, and I wouldn't say Matthew sidestepped it, but he didn't directly answer it towards the end. There's the first 50 block of Bitcoin. Is there a significance to that? And what would happen if that's moved? Meaning there's keys to it and it's moved. That could cause a loss of faith within the community. And there are some people that think it may impact effectively, like I said, possibly miners being paid. And by the way, that would be really important. Miners aren't getting paid. They're not going to work for free. So like I said, you have to look at this. It's an asymmetrical opportunity. If you're looking at it strictly from an asset class or as an investing perspective, you're fooling yourself if there aren't things that could go wrong. You have to be open-minded. We mentioned electricity, we mentioned government regulation, Satoshi appearing, quantum. There's multiple things that could go wrong. But I think that others like Raoul Pal and other deep macro thought leaders, I think they have it right. The asymmetrical opportunity is great. Therefore, my limit to my risk exposure is the limit of how much I put in. I already have too much money in whatever, cash, treasuries, government bonds. I don't know, maybe some family offices, 10 to 50%. That's doing garbage. That's doing nothing. Should I reposition a small part of those assets towards Bitcoin, Ethereum, Solana, and the digital asset ecosystem? Because the worst, if I'm not using leverage, I only lose what I put in. But my potential asymmetrical opportunity is so great, it may simply be worth it. That'll be for you to decide. The answer may be no. Probably the most common question I get from those early on relative to crypto is, I don't really know where to start in terms of like, how do I buy it? Do I go on an exchange? I download an app on my phone or computer and I purchase that way. I mean, that's easy. It gets you involved in the ecosystem. I'm not going to recommend against it. But at what point are you your own greatest risk? What do I mean by that? What happens if you get hacked? You get a malware attack. You get a SIM attack on your phone where they take over two-factor authentication. You have a problem. Your account's going to be drained and you have absolutely no recourse. You are not going to get reimbursed from the exchanges. Are you kidding me? That's your fault. And that's what they're going to tell you. Their insurance companies aren't going to help you. You're out. You're done. If you're a family office level purchaser, you probably consider over-the-counter services and professional institutional custody. That may require it will, larger amounts. Do you diversify in more than Bitcoin? I think so, but you'll have to think for yourself, make your own decision. Probably what are a couple of pillars, if I could use that word a little loosely in crypto, but Bitcoin, Ethereum, Solana, maybe Terra Luna, DOT. Those are, again, I'm using the word blue chip a little carefully here. So those are already pretty built out. Arguably, the massive early gains could be long gone. We're laughing at Bitcoin. Oh, it's only up like 350% in the last 12 months. Are you kidding me? That's incredible. Is that realistic moving forward? I don't know. Ethereum's up, about 1,000%? Actually, Bitcoin on Coinbase's top 30 over the last 12 months is up about 550%. So Bitcoin is only up 350%. It underperformed. So these are all factors that you're going to have to consider and make a decision. And by the way, they do very different things. The argument that Bitcoin has no intrinsic value is arguably, not theoretically, incorrect, but maybe that is the value. It's a highly unique store of value as its primary purpose. Things like Ethereum and Solana, they're doing things. They're actually creating revenue and product, and you're able to drop NFTs, and that's become a big thing lately. And there's so much going on, and everyone laughs at Shiba Inu. This is a joke. It's a meme coin. Well, it's been the greatest performing asset ever in a 12 or 15 month period. I wish I got in earlier, but look at what they've done. They've underpromised and over-delivered. How rare is that? They are much more than just a meme. They actually have more intrinsic value than Bitcoin. I'm not saying it's better than Bitcoin. They're completely different things. But in terms of intrinsic value, by their building on it, they have a swap program, they have NFTs, they're building out gaming. I mean, they're really doing things. It's impossible for one person to keep up, like I said before. You could put 10 hours a day, 12 hours, it's not going to be enough. Those of you like Kevin O'Leary, Mr. Wonderful, who went from 0 to 100 in crypto and digital assets real quick, real quick. He's really active, from staking and DeFi, you name it. 40% of his investment day is dedicated to crypto, even though for him, I think he said it makes up, what, 6 or 7% of his assets. It's where the opportunities are. The risk and reward is incredible that you can't ignore it. You have to look into it. You have to form a thesis. You have to make a decision. I am bouncing around all over the place here. I went back to, again, the most common question, like, how do I buy it? I gave you 2 examples. There are those that would buy it on a more traditional exchange and then set up their own air-gapped hardware wallet. So they're taking control of the custody. They're not leaving it in a hot wallet type on their phone or computer, which I think is a great risk to do that. But how comfortable are you with wallets? How do you not mess that up? Suppose you lose the keys. Do you understand seed phrases, multi-sig? This industry is still very complicated for the layperson coming in. Part of that incredible inefficiency creates opportunity. So it's not necessarily bad. But I mean, for some of you that are family offices, probably look at kind of some blue chip opportunities in digital assets, buy it over the counter, and use professional institutional level custody. Maybe a little boring. You may be buying only the big ones that are probably not going to exponentially increase as much. Maybe consider being an LP in certain funds that are active in the digital asset ecosystem. I mean, that's probably going to be the more correct approach for many people that are, I would say, in the family office part of the community. I mean, I had a lot of questions relative to the layer 2 on Bitcoin for Matthew. You know, Bitcoin is not what's called Turing complete. Does the Omni layer 2 allow opportunities for Bitcoin to get active in NFTs? I mean, again, I can make, again, like I said, I could go on for 12 hours. Well, I probably don't have enough knowledge to do that, but you get the big picture of it. And by the way, tomorrow, some of my opinions may change. They've already adapted a little bit. There's just so much new information. We will see a point when there will be digital asset experts inside of a single family office. And I used to think that would be one. It's impossible for one person now. For a more significant family office that really wants to get involved in this, they probably should be building out a digital asset team. I mean, I could probably help them if they wanted to reach out to me, but they may need a specific expert for stablecoins, for DeFi, for cryptocurrency and tokens, for NFTs. There's tremendous asymmetrical opportunity here. You're probably never going to see it again. It's going to be a little window. I don't know what that is, a year, 5 more years, maybe 10 more years, and definitely with risk. I get it. And maybe like Raul says, you make your decision and mitigate your risk by limiting your exposure, but you're still active in getting involved in it. There might have been 1 or 2 more questions that came in, then we'll take it to the home stretch. Isn't there a big risk that the US government, someone's asking, clamps down on crypto? Well, we kind of covered that with our guest. And again, this could get really, really deep. Now, again, there's going to be some people that say there's no single point of failure. There's no CEO to put in jail, no board to reprimand. There's no computer to shut down. So how your mind is thinking on traditional centralized organizations, this is completely different. The government can't just say no Bitcoin. Now, again, that gets a little complicated. Could the president do an executive order that's short term, that ransomware and national risk to security? Probably. That would really be bad. That would probably get reversed or be very temporary. And again, I gave some reasons why to our Constitution here in the US. We're not China. It can't just be banned per se. And even that doesn't get rid of it. But, and I discussed this already with Matthew, could they make it really, really difficult? Look at what the government's trying to do now with unrealized capital gains. They know it wasn't going to go through, but I'm going to talk about this today in my sovereign risk program that I'm doing later. They're greasing the wheels. They're setting the stage. Probably something like that is going to happen in the future. And that could be impactful. And I hinted at it with Bitcoin being property and being maybe taxed like real estate annually. And yeah, it starts off 50 basis points, 1%. I could kind of deal with that. But does that ever disappear or go backwards? No, it goes up. And that's the problem. So there are things that could go wrong. And if the government were to, disallow Coinbase or DAOs in Wyoming or banks, yeah, they can make what I call the on and the off ramps really, really difficult. I think that would be a terrible, terrible thing for the US. We would really, one country would step up and absorb a lot of that in. I think we would lose who we are as a country, and pretty quickly. That would not take 100 years for that to happen. The good news is I don't think it's trending in that direction, although I disagree with many aspects of what the administration has done and some of Gensler. And Gensler knows the tech and understands Bitcoin very well. So definitely don't underestimate him from that perspective. But yeah, I'm concerned that they're going to make some wrong decisions. There'll be compromises along the way, all of that. One of the questions that came into me via text was about this crypto winter, the bear market. I brought that up with Matthew as well. It's happened in the past. Even Plan B said it's happened in the past. I'm guessing it's going to happen again. Now, what happened in May and June with Elon's tweets and China getting out of mining and things going down 50%, that's just volatility in this market. If you don't have the stomach for that in digital assets, this is probably not for you. But that was not a winter. Past winters, we're talking Bitcoin going down about 80% and others going down 90 to 99%. It's scary. Is that going to happen again? Who knows? Is Bitcoin at a different place now than it was, say, 4 years ago? Yes. But others will look at that and say, wow, that's a tremendous opportunity. I mean, if Bitcoin were to really go down that much, and Ethereum and Solana, but these are probably not going to go away. Bitcoin hasn't gone away before, and partially due to what caused it and how the government's reacting and regulation could mean it's a tremendous buying opportunity. Tremendous. I mean, getting the 100x returns and all that on a lot of stuff now is really, 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 really hard. Now, Matthew did say, pinned to the wall, he does think Bitcoin would become $100 trillion plus asset, which I guess means it goes up 100x in 10 years. I think that's optimistic. I don't necessarily feel that way, but I don't know for sure. No one does. Who knows? Maybe something happens where it goes to practically nothing. This is a decision that you're going to have to make. Do your own research and think for yourself and make your own decision. There are absolutely things that could go wrong. There's for sure things that could go very, very right. But back to that bigger point, in a bear market or a winter, as they call it, companies with real fundamentals, and there's a lot of them. And even though I poked a little fun at Bitcoin with quote unquote no intrinsic value, doesn't mean that it doesn't have powerful network effect and absolutely serve a purpose. And all these big bears over the last 10 years, well, if you listen to them, you fucking lost out. That doesn't mean they may not be right in the future. But like I said, 1% Bitcoin, 99% cash 10 years ago, you would have beaten every other broad asset class. They've been wrong. They might be right in the future, but are they older and set in stone? Maybe, but Tudor Jones is active and he's not a young guy in crypto. Druckenmiller and Dalio, I wouldn't say they're warm to it, but they're dabbling in it. Steve Cohen didn't say that he was, but at the SALT conference, I think he basically very strongly hinted the answer is yes. So again, do you go for confirmation bias and find people only on your side of the fence and you look for them to confirm? Or if you are an advocate, do you listen to some of the others that are against it to understand their point of view? And often it's ignorance and arrogance that often leads to them, being a stick in the mud relative to their opinion. But I guess I could make that argument both ways as well. That would be unfair. I'm taking a look at the questions. There may be one or two more, and then we'll put an end to this. Someone does bring up about mining operations and opportunities. Yeah, I mean, that is another way to be active in the ecosystem. Uh, this is going to open up a can of worms, but the potential of, clean mining and ESG and creating and investing in mining operations, if that's an issue within, with you or your family office, and you're mining your own Bitcoin and you're storing it, you're hodling it, and therefore it makes you feel better that it's quote unquote ESG compliant in a facility. So that is another way to potentially do it. I believe there's even one or two public miners that would classify as ESG compliant. Now, the whole ESG issue could be another 3 or 4 hour dialogue. So you're telling me that banks are ESG, that Visa and MasterCard, and when you look at their full network of what they do, I think this is a very much a political football issue. And yeah, the whole thing with Elon's tweet and all that, I mean, maybe I'm just naturally a conspiracy-centric kind of person, but it did make me wonder about a couple of different things. I don't think there's any more newer questions coming in. I hope to have a guest on where I could really, for 2 hours, maybe 2.5 hours, go really, really hardcore into Bitcoin. And as you could tell, I hope I'm fair and balanced. Am I a believer and an advocate? Yes, with some reservation, but I'm much more broadly diversified in the digital asset ecosystem. But to not admit that there's challenges and things that could go wrong is just foolish. Now, there is a decent point that Matthew brought up that maybe I'll close with. Angelo, the digital asset ecosystem is ballpark about 2.5 trillion now. Is it going to 100x in 10 years? Possibly. Then I guess you should be involved, even if you're limiting your exposure, and that is limiting the risk that you take. But Matthew's point of Bitcoin possibly 100xing in 10 years, do I need to be as diversified as you're talking about? Would I get most of that exposure, if not all of it, and maybe less volatility and downside by only being in Bitcoin? I don't know. You'll have to make your own decision. You can make that argument. Suppose Bitcoin is Yahoo and something else is Google. So it doesn't go away, but it kind of sucks and really stagnates. Things could go wrong. I think you need to be more diversified than just Bitcoin. But I hear the other side of the coin in the argument. And again, you're going to have to make your own decision. We have great guests upcoming, including some of the hardcore Bitcoin maximalists. Robert Breedlove is coming back on in December. And again, we do want to eventually do a really, really deep dive into really everything digital, which I think I've kind of done, but I really haven't done like a 2 to 2.5 hours going everything Bitcoin, which many of you who are still on the fence and not active in the digital asset ecosystem, that's probably going to be your starting point. It's the usual. It's Bitcoin, Ethereum, and lately Solana, who's been like a darling of the community and wonderful in terms of since the beginning of the year. Just look at its return profile. But now it's already a top 5 or 6. So it's so-called blue chip within the community. So, many of you probably see the enthusiasm in my voice and in my look. To me, this is really an exciting time. I have more questions than I have answers. I'm still relatively feeling like a novice within this, but spending multiple hours on it every day and hopefully learning something that sticks up here. But I do feel like a little bit like playing poker. I need to make some tactical and strategic decisions, often with limited information. I must realize I'm going to be wrong, probably a fair amount of the time, and I need to adapt my thinking, just like poker, as new information comes in, which is coming in with like 1,000 fire hoses spraying on me. So where do I get my resources from? How do I make decisions? This is all the complexities of this ecosystem. Again, I have more questions than I have answers. You all have been very generous with your time. Thank you to our live audience for sticking with us. We hope you enjoyed it. And if you're watching on video or audio, we hope you enjoyed it as well. I'm Angelo Robles, host of the Angelo Robles podcast, a founder at Family Office Association. Check us out, become a member, lots of resources, familyofficeassociation.com. I'm very active on social media, LinkedIn and Instagram, and mainly YouTube. My platform there is simply @Family Office channel. You could find it. Thank you all so much for your time. Have a great day.